Okay, welcome to Wall Street X. My name is Hugh, and we have the top stocks to buy in March 2026, and there are two of them. A reminder that most active funds do not beat the S&P 500 over the long term, and to always do your own research. But the two top stocks to buy in March 2026 are Lockheed Martin and Microsoft. Starting off with Lockheed Martin, LMT. To put it simple, Lockheed Martin is a great buy this March just because of the U.S.'s recent campaign in the Middle East. As you can imagine, wartime usually bodes well for defense contractors, and Lockheed Martin is the big fish in that pond. And it's the top of the list due to that reliable dividend, massive dividend history there, recent earnings beats, relationship with the U.S. military. I could go on. Lockheed Martin is the biggest, again, defense contractor in the United States, and it's slated to hold that top spot with an expected EPS increase of over 16% in the next year. Guys, given Lockheed Martin's size and what it does, that is very impressive. And even though the average analyst rating for LMT is just a hold right now, our rating remains a buy with a plus 32% price forecast over the next year, and it's up over 45% in the past 6 months. We think it's going to continue to outperform, and we think LMT is a great pick for investors that want a low risk, medium reward stock with a reliable dividend and something that is going to be consistent. Whereas Microsoft, MSFT, is a solid buy as well in March because of its reliable cash flow streams, and again, that dividend is lovely. Microsoft stock is now down over 22% in the past 6 months, whereas LMT is up quite a bit over that time. But Microsoft's down mostly due to their involvement in the AI correction. Investors are uncertain what the ROI is going to be with AI, but sharp investors know that down periods like this are the best times to get in, and they make great buy periods. Microsoft still has incredibly strong fundamentals with impressive revenue growth and EPS and earnings growth to beat. It's just so good. If you look at the growth, it's absolutely just parabolic right now. It's unstoppable. Not to say that's indicative of future performance, but it is looking pretty good given the reliability of some of their cash streams, just like their cloud computing and Office 365 platforms. Pretty minimal debt. Again, very solid fundamentals. 31% debt to equity is exactly where you want it. Pretty fair valuation now at a 24 price to earnings. We haven't seen it this low in a little bit, and relative to other tech companies that are this size in the Meg 7 and beyond, very good price to earnings there. Very good valuation. Great time to get in. Of course, it could still go lower. You want to not put all your money into it at the same time, but just buy little chunks over time, and that's usually a really good strategy to have. They also have a really good dividend history dating back 20 years, even if it is a smaller yield at around 0.9%. Analysts have rated Microsoft a strong buy with an average one-year forecast of plus 32%, and it's clear they'll be able to hold on to that and hold on to their dominant market position as they have for quite some time. So Microsoft has beat all 4 of the last earnings calls as well. They have some great momentum here going on, and we've put them as a low risk, medium reward, although you could argue that the risk is like trending towards medium, just again with their investments in AI and the questions about how they're going to pay that off. But the medium reward for sure. You could also argue high reward, and we've rated it by with an 8% one-year forecast, but we think that's pretty conservative given it's now down 22% as well. So there you have it. Lockheed Martin and Microsoft are our 2 top stocks to buy in March 2026. So we hope you enjoyed today's video. Click this link to see the next one, and I'll see you next time.